Thanks for checking out this question from our daily live Zoom calls. Please like and subscribe to keep learning how we help the largest online community of self-directed retirement investors and entrepreneurs grow and control their retirement funds. And this question is a great question. It's actually answered in some of our slides here. So the first question is, do I need an EIN to open a solo 401k? We're going to assume we're focused on the solo 401k. And that goes to eligibility. So a solo 401k is for an owner-only business with no full-time W-2 employees. Do I need an EIN for my self-employed business? The answer is no. So that's one of the differences between the discount basic solo 401k offered by the discount brokerages, like say Fidelity or Schwab or TD Ameritrade, where they generally require that a self-employed person use an EIN for their business to set up the solo 401k. Whereas with our plan, we obtain an EIN specifically for the plan, which meets the IRS expectation. The IRS expectation is that a separate EIN is obtained for the plan. And practically, this is important because to the extent that there's any type of, say, interest income or other type of tax reporting that's done with respect to a solo 401k investment, by having that separate EIN for the plan, that tax reporting can be done under the EIN of the plan so that the IRS understands that that income, that gain, is growing on a tax-deferred basis inside your 401k account. So to take a simple example, let's assume that someone sets up a solo 401k and then opens up a bank account for their solo 401k. And they might be invested in a certificate of deposit, or it could otherwise be an interest-bearing account. So now the bank is going to have to issue a 1099 INT to report the interest earned. So by obtaining a separate EIN for the plan, which is then used to open up the bank account for the solo 401k, the bank will issue that 1099 INT under the EIN of the plan, as opposed to a scenario where the account for the solo 401k was opened up under the EIN for the business. In that situation, the 1099 INT would be issued under the EIN of the business. So now the IRS is going to expect to see that interest earned reported on the business tax return. Whereas if the EIN for a 401k was obtained and the 1099 INT was issued under the employer identification number for the plan, now the IRS will not look for that interest to be reported on the business tax return, and they will understand that it's growing on a tax deferred basis.